Good afternoon, everybody. Welcome to the quarterly webinar by Rupeeting. I'm Sagar Lele, the founder of Rupeeting, and I'm joined today by the head of investment advisory and the future CEO of Rupeeting, Dhiren Jain. So we've got some updates, corporate updates about Rupeeting, which I'll be covering first, and then we'll move on to the rest of the webinar, which will be presented by Dhiren. So quickly gonna give you an overview of how we're gonna do this. Initially, I'll talk a little about what repeating is, what we do, our association with Paterson, and that has a bit of a development over the last 1 year, which we'd like to focus on today's webinar. We'll then move on to how the portfolios have performed, how we are positioned in terms of our portfolios and strategies. I'll cover that bit, and then we'll move on to Dhiren to cover his view on the markets, what our portfolios look like at this point in time, what the strategy is going forward, and our stock positioning and portfolio positioning thereby. We'll then keep the questions and answers towards the end so that we can take a cumulative view and stock of everything that we've spoken about, whether it is Rupeeting and Paterson or whether it is the market view or whether it is the portfolios. We'd love to get some feedback from you also during that entire session. So would highly encourage you guys to stick around and ask questions or participate and make it interactive towards the end. Starting with Rupeeting, as you all know, we've been existing for about 4 years now. We are a SEBI registered investment advisor. We've got a corporate license since the very beginning. We've been managing about 200 crores of assets under advice since the beginning. We've got some very large clientele and some corporate clientele as well in the interim. So a sizable AUA, good performance on small case, one of the leading managers when it comes to performance on a 3 year, 4 year basis. And over time, we've also roughly serviced more than 2,000 customers, and that continues to be a growing number. Now, one of the major developments you've been hearing a lot of powered by Paterson, as we put it in our name since the last 1 year. Paterson is a company which we got very closely associated with over the last 1 year. It is actually a company which is based out of Chennai. They are one of the largest stockbrokers in the south of India. They're also one of the oldest stockbrokers in India. They have a very rich legacy of more than 130 years. The company was established way back in 1892 and it still continues to exist. They may be one of the very few surviving stockbrokers since that time. They've been pioneers in a lot of spaces in the entire financial services industry when it comes to investment banking or even the formation of Madras Stock Exchange. They were the founding members there. They were one of the pioneers in wealth management space as well. So a lot of firsts for the Paterson Securities Group, and Rupeeting's association with them has only grown thicker. As a lot of you know, we started a PMS together 1 year ago called Paterson PMS, and that has been functioning extremely well, very encouraging a response over the last 1 year. We've garnered about 120 crores in AUM in a very short span of time, which is very encouraging a step. And looking at how synergistic this association has been, how much of a well-oiled machine we are running, we thought that it's time to get this association to the next level. So what we're doing is that Paterson will be acquiring a controlling stake in Rupeeting. We've signed an agreement to do so, but obviously this comes with a lot of regulatory approvals. We have to get regulatory approvals. We have to get internal approvals. SEBI has to approve the transaction. The exchanges have to approve. So there is a lot of process work to be done in this. However, the intent to work together and become part of the Paterson group has been pretty clear from both parties. So there's nothing to, we've already sort of started working together. What we'll also be doing over the next couple of months as this process takes place is that Rupeeting as a brand will stop to exist. We will come under the umbrella of Paterson, and Rupeeting will in all likelihood become Paterson Advisory Limited. Our DNA remains the same at Rupeeting. With Paterson's backing, we only become stronger. We get a lot of backing in terms of leadership, in terms of management, in terms of legacy, and the brand that Paterson has. We're sure that we can leverage that brand equity into making Rupeeting much bigger than it already is. And with the help of Paterson and its ecosystem, we'll only become stronger. We also get a lot of access to Paterson's existing customers, which are very, very strong in the south of India. We'll also be able to leverage Paterson's existing products and bring them to Rupeeting customers so that you get a wider array of financial services products and help from us. We only hope that our relationship grows stronger from here. you don't need to worry one bit about our association or the thickness with our customers reducing. I think it's only going to go upwards from here, and our expertise is going to increase. So with this, we welcome this step with Paterson. And of course, this entails a few changes in terms of leadership as well. What this means is that I will be taking up a larger role in Paterson Securities Group. I have been appointed as the executive director at Paterson Securities, and I'll be taking care of strategy, branding, marketing, sales, business development, operations, pretty much everything at Paterson Securities. And because my bandwidth will choke up a little bit over there, we're handing over all matters associated with Rupeeting to Dhiren Jain. Dhiren is somebody who has been associated with Rupeeting for a couple of years now. He has been managing a couple of our small cases and has been exhibiting an exemplary performance in that. He comes with a lot of experience, more than a decade, about 12 years spent in the finance industry. He is someone who graduated in commerce and management in Mumbai, did his post graduation in finance from University of Reading in the UK. He also worked in the UK for a period of 6 months as a currency and forex trader, and then came back to India to join his family business. His family business is actually into stockbroking again. He ran that for a good decade. They are one of the larger stockbrokers in India, in Mumbai. It's called SP Jain Securities. They've got a very good clientele, HNI clientele. Dhiren was responsible for growing the business, for developing a tech interface, for modernizing the company. He's built several apps for the company, created a digital presence, and made the company more digital savvy, more attuned to what the new customers have to buy. So after this successful transformation that he's pulled off in his family business, he's gotten a thicker relationship with Rupeeting, and now we hope that his expertise in tech and customer support and scaling up businesses comes to Rupeeting as well. He'll obviously I'll closely be involved with Dhiren in terms of management, and so will the rest of the Paterson group. So we welcome Dhiren and welcome this step to Rupeeting as well. Just to give you a little bit of a background on Dhiren, he is someone who's been in the finance industry for the last 12 to 13 years. He did his bachelor's in Mumbai, master's in University of Reading in the UK. Worked in the UK for 6 months as a currency and forex trader. Then came back to India to join his family business. His family is actually into stockbroking as well. One of the bigger stockbroking houses in Mumbai called SP Jain Securities. So he managed that for about a good long decade, where he grew the business, scaled it up, made it digital, launched several products within the broking business to make it more tech savvy, make it more friendly for the new age customer. And once that was done, he's sort of involved himself with Rupeeting and now the Paterson Group to a much larger extent. So we expect his expertise in stockbroking and on the tech front and excellent customer relationships to be migrated into Rupeeting very seamlessly. And he's already started in full force. But this is sort of officially announcing the transition from myself to Dhiren Jain. So that's it on the changes for Rupeeting. We'll move on a little bit and give you a brief of what we do for people who've not known us for very long. So we've basically got three products. When Rupeeting launched, we launched on the small case ecosystem. We had about 9 baskets in all, about 6 of them on the equity side and about 3 all-weather small cases. These have been doing extremely well for the last 3 years. However, what we've done is we've also made a few changes in terms of the number of baskets. We'll be trimming a few products which we think are not working from a business standpoint. Performance was great, but maybe not packaged well or not attracting enough crowd. And we'll be introducing a few new products, but I'll let Dhiren talk about that. After small case, what we also realized was that there is a big market for custom advisory. There's a lot of people who do not really want a one-stop, one-size-fits-all approach. They don't really like the model portfolio approach. They want a slightly more customized solution. And that's where last year we launched something known as Voyager, which is a portfolio advisory product solely focused on equity. What we primarily do here is that we take stock of people's existing investments. If you've got a bunch of stocks that you've bought either on advice of somebody else or by yourself, we sort of take a stock of what your portfolio is like. We trim it down, we recommend some changes, we refurbish the entire portfolio, and we hand over a fresh new portfolio to you. And we also not only just build the portfolio, but also manage it over a period of time. So that product has seen great results over the last 1 year, very encouraged by the number of customers who've got on board. Obviously, market conditions have been tough over the last year, so performance might not be exemplary or as good as what we've delivered in small case, but time will obviously solve for that. And in any case, equity investments and our approach has been pretty long term, so we're confident of running this product pretty well over time. The third product we launched was a mutual fund advisory product. This primarily plays on the fact that a lot of regular mutual funds through distributors, people end up paying a lot of commissions. They want usually a fixed price product because we don't get any commissions from mutual funds in this. We invest only in direct mutual funds. This is a fixed fee model, so there is no bias in terms of our recommendations and advice. And we're able to curate portfolios depending on who people are and what their requirements are. So it's a very customized product which takes into account all of our customers' needs, and we make a basket of mutual funds for them. This is relatively new again, just 3 months into the mutual fund product. But very happy to say that with Paterson Wealth Association, I think this will only grow stronger because Paterson Wealth manages more than 550 to 600 crores of AUM in mutual funds. They've been doing this for more than 10 years. So there's a lot of expertise that we can grab up from the overall group. There's a lot to learn from there and improve our product, improve our reach. So very excited about the path ahead. I'll quickly give you an overview of what our performance has been and then pass it on to Dhiren for market updates. Harsh, if you could move to the next slide. Yeah. So in small case, as we've seen, the last year has been a little tough. And the market has been very volatile, but it still clocked a positive return thanks to how performance has been over the last few weeks. But overall, Nifty 500 has given a 8.7% in the last 1 year. We've been able to beat it only in one of the small cases. However, if you look at our 3 year performance, I think we're doing pretty well. 2 out of the 3 small cases have outperformed, and 2 of them by a very large margin. We used to have 2 other small cases here, which we've closed down. One was the rocket ship small case, and the other one was disruptors. Both of these were also outperforming on a 3 year basis. However, because of a lesser number of subscriptions, we've kind of taken a call to say that let's close that down and package something that customers want. So towards the end of the webinar, when the Q&A is on, we would love to hear your thoughts in terms of if there's any recommendations that you guys have got for new product launches. We'd love to hear it out from you and see how we can accommodate that and launch new small cases. In Voyager, we'd like to highlight that performance as well. Yeah. So in Voyager, over the last 1 year, despite tough market conditions, we've been able to outperform the benchmark in nearly 80% of our customer portfolios. This is a great number given the fact that it's not only the tough market conditions that play into account, but also you have to understand that this product is a product where we already take into account what the customer has and slowly refurbish the portfolio. So at a lot of times we're sitting on a very inefficient portfolio for a long time till we achieve some optimum level of or a appropriate portfolio is made over time. So despite that, we've beaten the benchmark in most of our customers' portfolios. That is for the core portfolio. The Voyager portfolio also has a satellite offering which complements the core portfolio. These are usually short-term recommendations which last between 2 weeks and about 2 months. So we try to make tactical calls here, play some themes or some technical advantages, and try to make 8 to 10% returns on average on these recommendations. That has done extremely well. We've done a 76% win ratio over the last 1 year. Our average holding period is about 50 days. we've been clocking about 8% return on each of these recommendations, and that comes to an annualized return of 35%. If you compare this number to the 8% growth in Nifty 500, we've done phenomenally in the satellite recommendations. So I think this focus will also continue as we go forward. We want to double down on our strengths, and the Voyager product is something that we'll be pushing pretty aggressively and adding strength on. So I'm going to take a pause here. What we'll do is we'll pass it on to Dhiren. He'll talk a little about what he thinks about the current market conditions, how we are positioning our portfolio to suit the current market conditions, what we think the outlook is, and how the strategy should be given the particular outlook. So we'll pass it on to him and then come back for a Q&A. Over to you, Dhiren.
Hello, everyone. Thank you, Sagar, for the introduction. And let's shed some more light on this Voyager performance once before we move on to the market updates and any other, then the question answers and all. So, firstly, for the Voyager performance, as Sagar clearly mentioned, that we've outperformed the benchmark in 79% of the customer portfolios. And in this also, especially, we've taken advantage of the volatility in the market, where we have been sitting on cash in 80% of the portfolios, where we sit on cash, minimum 15 to 20% cash, where due to the volatility in the market, because of n number of reasons which you guys know regarding the tariff deals, the trade deals, and the geopolitical reasons. So we deploy that cash when we think we get value in the market. And we get out of the market again when we think like we are getting 15, 20, 25% returns in that one particular stock in like 20, 25, 30 days. So that gives us the edge to beat the benchmark indexes over a period of time. And it also helps the investor to be connected to the market at the same time. And in the same way, in the Voyager, where we keep 20% of the portfolio in the satellite, where we have a pick every 10 or 15 days, where the stock is giving an average return of 8%, as Sagar's clearly mentioned. So we think slow and steadily, the Voyager portfolio, the performance of the Voyager over a period of time will beat Nifty benchmarks, all the benchmarks, and we are confident about it. Hopefully, Voyager, we cater more and more customers over a period of time, where we think the customers not only who have around 5 lakhs, 10 lakhs portfolio, we can manage customers even of 50 lakhs a crore portfolio in Voyager as well. Yes, so let's come on to the performance of the Nifty now. So where from year to date, Nifty is given 10% returns. As you can see, it's been a volatile market over the period, where everyone saw Nifty made a high in September, which was around 26,250. And then the big dip, which we saw in October, where many of the retail investors have panicked, have sold their shares. And then again, the big panic which happened during the April 1st week, where Trump came out with all those tariffs, where you can see the market bottoming out around 22,000, 21,300, 21,700 approximate. And again, we've seen a pullback in Nifty from downside, where the Nifty right now currently stands at around 25,000. But still, I feel the market's going to be volatile over a period of time. And as you know, that the tariffs, the trade deals have to be made till 9th of July, which is the 90 days end, where I personally think, and we don't know what the Trump administration is going to do. As on date, only UK is able to make the deal with US as on date, and where India is trying to make a deal with the US administration, but we are not getting over the line. So as in when the 9th July comes closer, again, the markets are going to be volatile, like a week or 2 weeks before the markets will start getting volatile again. So either the Trump administration can give us a 90-day grace period again to get the trade deal done, or they may put the tariffs. So, which we think will be very volatile again. The markets will be very volatile again and will give us a lot of opportunities to invest if that happens. So, yes, likely we would like to sit on certain percentage of cash again during that period. If we get an opportunity, if we get a value buy, we can take advantage of it. And as you can see, the volatility index, the India VIX, the graph, it's still above the comfort zone. The comfort zone of the India VIX is around between 11 to 14. We are still trading above 16 in the VIX index because we are still not sure. The market's still not sure what's going to happen with the trade deals. Then the India-Pakistan border tensions, which again, everyone knows the ceasefire happened and all. And then there are other geopolitical reasons between Russia and Ukraine, which is still ongoing from past 2.5 years, 3 years down the line, and the Israel and Gaza thing. So there are many factors right now currently in the market due to which we can see a greater amount of volatility in the next quarter or two. But that's the best time where we can that's the best time where we can deploy the cash which we've been sitting on, where we can see a value buy and we can gain good percentage of returns in the portfolio of the investors. Next. So there is one silver lining in the market, but that can also be it's like the factors which are already there due to the the trade deals and the geopolitical reasons. The only silver lining right now in the market is only the rate cuts, can go, which can take the market a bit on the upside, which can have a like 5-10% move in the market from here on also. But it's going to be over a period of time. It's not going to be in the next 1 or 2 or 3 or 4 quarters, in the 4 meetings or something. It might take a year or more than a year. I personally feel it should take a year and a half to at least see those rate cuts every meeting, each and every meeting, whichever is the next one. So slow and steadily we'll get there, but that is one thing where the liquidity will come into the market again. There'll be a lot of loan sanctions happening and everything. There'll be capex in the done in the economy, so which can boost the economy. So right now in the current scenario, if you ask me, it's a very good time to invest for a longer term. That is 2, 3 years, 4 years, or minimum 5 years down the line, where you will create wealth if you invest for a longer term. Short term and medium term can be volatile, can give you negative, positive returns depending on the stock selection and everything. But longer term, the market looks positive. The Indian structural story, as you know, the GDP growth right now, as mentioned in the slide, it's 6.2, it's 6.5. And the Nifty PE, which is as on date, Nifty PE is 25.2. It's still not that expensive as per the GDP. If you compare it with the US, if you see the GDP of US is 1.8 or 2, where the S&P 500 is trading at a PE of 26.6. So over a period of time, again, India looks good for a long-term perspective, long-term investment, long-term wealth generation. The strategy which we worked in the past and everything, like just can give you some examples on it. In the past 3 to 4 years, people have selected stocks or 2 or 3 or 4 stocks from the same sector as the whole sector used to move. So now it's not going to be like that in the coming a year, 2 years, or 3 years down the line, because slow and steadily the companies or the stocks from each and every sector who are performing good, the management is giving good guidance, the management is giving good growth, the results are showing, the quarterly results are showing. And secondly, you can see also in the rates, the stocks which are trading at good rates and everything, where you have to be selective for the stocks now. You can't select the whole sector and invest in the whole sector. There'll be times where the whole sector might move. We can take advantage of that. But as on date, as of scenario, what is there right now, we have to be selective of the stocks. We can't select the whole sector and invest in the whole sector and move ahead. That's it from us, and we'll open the floor for questions now for everyone.
So to ask questions, I think you can just unmute yourself and you'll be able to speak.
Or you can just raise your hand also. We can just tell each one of you guys who can just start with the questions. So there is one Pratyush Goyal who's
Sorry.
messaged about thematic sectoral move. So Pratyush, thematic sectoral move. So frankly, sectoral move in this market scenario is difficult. Thematic, there'll be period, like as I said, there'll be times in the coming 1 or 2 or 3 years where there'll be sectors like as of now, the defense sector has moved because of all these geopolitical reasons and the border tensions of India and Pakistan. But this is kind of just an opportunity for a period of like 2 months, 3 months. It's not more. But other than the defense sector, in the next 1, 2, 3 years, where we see or we may see some opportunity in the some sectoral move, then we will be bullish on that. We will come out with some thematic small cases also at that point of time, where we feel that that theme or that sector will give us good returns. And that will be only for a period of like 3 to 6 months, not more. So in small cases also, as Sagar had mentioned earlier, like we've shut down like two disruptors and rocket ship, two plans, and all season conservative and balanced also at the same time. That we've shut down that for a reason where we may play with some thematic or sectorial move over a period of time when and as and when we feel that that sector might move and that sector looks good for investment for 3 to 6 months down the line.
Sorry, just to add to that, the overall view right now also is that the markets are in such a place that there is a lot of volatility happening, and sectors or themes are becoming very short-lived or very fast-moving. So what we're also trying to do at this point is that while the markets are volatile and you're seeing some very sharp falls happening in the market, we more have a stock selection criteria than a sector rotation criteria. I think that's the focus of the entire team right now. So what we're trying to do is we've got a bucket list of sorts when it comes to stocks. We're constantly on the hunt for new opportunities. We've got some very nice opportunities that have always been available but have been very expensive in terms of valuations. So a lot of these corrections are giving us opportunities where these stocks, when they fall 30-40%, they come to valuations that are slightly more comfortable compared to the past. We were actually capitalizing in those opportunities and picking up stake. So the fund management style right now has become very stock specific and very opportunistic on those terms. So that's the focus at this point in time. Of course, this is not forever. This will obviously change because as soon as the volatility reduces over the next coming weeks, you might have to change your style and go back to something of the past. But this is the current strategy that we're following. And what we've also done, just to highlight, is that since the last 6 months, we've also been significantly sitting on cash in a lot of portfolios, either custom or the PMS or even otherwise, where we've slowly deployed cash over time. So even in that process, the strategy that works amazingly well is that you have this dry powder which you're utilizing to pick up quality stocks rather than focusing on sector rotation. The only sector rotation we've limited ourselves to is safety creation in the past. To cushion ourselves from the volatility and to cushion our drawdowns, because the drawdowns have been pretty sharp otherwise, right? So we've picked up some amount of overweight positions in technology, in healthcare, in the past, just to shield ourselves a little bit. However, that also I think we've reduced as an approach now that the markets have stabilized a little more compared to the last few months. Ranjini, we can move to you.
Thanks, Sagar. That quite answered the question I had on volatility, actually. Thank you so much. And Dhiren, you made a very interesting statement. What worked in the past won't work in the future. So, how is it going to look in the future? Like Sagar said that we're not going to move into other sectors but play within the field. So, could you elaborate on that for better understanding? Thank you.
Sure. Ranjini, the thing is, as Sagar also mentioned, and we have to be stock selective now. We can't select the whole sector as of now because the sectoral moves which we have seen over the past 3 to 4 years, like people have played well over this 3 years where a sector is booming, people just deploy their funds in those sectors and wait for like 2, 3 months and then come out of the sector. Right now, it's not about that. If you see in any one sector also, uh, example, you can take technology where not all the companies are giving good results. The management guidance is not up to the mark for each and every company. But if you want to have a play in technology, you have to select a stock out of the whole sector, which you think and which we think like the management is good, the guidance is good, the upcoming results and the TCV values and everything are up to the mark. And we see a bit better growth than in that stock than the other stocks. So majorly, the approach right now is the bottom-up approach, where we are selecting stocks according to the results, meeting the management, going to conferences and everything. Before till now, we were doing the uh, top to bottom approach where we were selecting the sectors and then selecting the stocks. So that is the difference of the investment strategy right now, and which I think will persist for another a year and a half, or maximum two, till all the dust settles down.
Thanks,
Ranjini,
Dhiren. And
sorry,
yes, Sagar.
the way I like to put it usually is that there was a lot of uniformity in terms of how the market was moving post-COVID. Um,
Okay.
there was more like everything would move, right? Whatever you touched was gold. It was all easy at that point in time. However, what we see right now is that there is a larger amount of disparity in terms of performance. There is a lot of polarization happening in terms of how companies are moving and performing. And
Hmm.
that's not only to do with the economy, but also in terms of structurally how industries are getting placed. So one of the very relevant examples is the auto sector, for example.
Yeah.
Uh, Auto, if you look at Tata Motors, did extremely well because they were early movers in the entire EV space. They captured a 90% market share in EV passenger vehicles. For the longest time, they were the single largest ruling OEM when it came to EVs on the
Yes.
four-wheeler side. However, if you look at it now, what's happened is that Mahindra launched two new products, and the market is completely moved and impressed by what that can entail in terms of bookings and in terms of sales.
Hmm.
So we suddenly even we shifted our preference from Tata Motors to Maruti Suzuki, for example. Mahindra.
Mahindra.
And what will happen in the future is that if you look at Maruti's plan, they're setting up the largest battery manufacturing capacity in Gujarat at this point in time. When it comes to electric vehicles, 50 to 60% of the cost of the electric vehicle is the battery.
Battery. And I
Um,
think also semiconductors are also something that people are buying at
Yeah,
this.
yeah. So with Maruti setting up their own capacity on this front, what will happen is that it will gain a competitive advantage on the cost front when it comes to its peers. So you'll end up with Maruti becoming the cheapest producer and the cheapest vehicles available when it comes to EVs. And India is a supremely price sensitive market.
True.
So as soon as Maruti launches its EV lineup, I think we'll again switch our preference from Mahindra to Maruti. So it's a time to stop being loyal to a lot of these companies and become a little more tactical and cunning or greedy when it comes to our picks. So yeah, I think it's more about being selective rather than uniformly playing the market out. Even if you look at the results this quarter, right, whether it's banks, whether it's autos, whether it's any other sector, there is disparity happening, and hence the focus is more on research and stock picking.
Thanks, Sagar. Thank you so much, Dhiren.
Most welcome, Anshul. So next, on to the next, I think Purnima has.
So we'll just say the question out loud. So Purnima is asking, can you please give us examples of some of the stocks that have worked well? and those that have not done as expected, and the action you have taken for the latter. It's interesting. Yeah, we were very accustomed to blowing our trumpet during these calls and saying how well we've performed. See, some of I'll probably take the first one and second one. Dhiren, I can give him enough time to think about one of the messes that we've created and how we've sorted it out. So one of the success stories has been PG Electroplast. I love talking about the stock. Primarily because we caught it at such an early stage. It's a very interesting company which manufactures consumer electronics for branded companies like Samsung, Haier, Carrier, etc. Not these specifically, but the likes of them. Their primary business comes from, they used to initially manufacture just the shell or the outer casing of ACs, the plastic bit that you see around the AC. And they slowly moved into manufacturing parts of the AC as well, and eventually started manufacturing the entire unit, which was supplied to these guys. So they've already got a great clientele, and they've only increased wallet share there and become more sticky and more crucial for all of them. So what we did was we played that stock very meaningfully very early on. Back in, it was one of the first stock picks in our small cases as well back in 2021 October. Uh,
21 October.
and since then, PG Electroplast has evolved not only into manufacturing the whole AC, but they're also manufacturing entire units of washing machines and refrigerators now. And they're moving into other consumer electronics as well. The beauty being that most of the brands that they used to supply to are obviously multi-product brands, and they get increased wallet share within all of these brands. So very aggressively, high growth company has performed extremely well, has given us multiples in terms of returns. So that's one example. I can go on about the success stories, but I think I'll let Dhiren take the burden of talking about our failures, since he's taking the burden of managing the company as well now.
Yeah. So, other than the success stories, like I would just like to shed some light on the Voyager stocks and the Voyager picks also. As Purnima just asked, like what has worked well and what has not worked well as expected. So, uh, just like in a Voyager, we have a core. We time to time change the portfolio. We have a core portfolio where we think those stocks can perform well over a period of time in the long term and all. So in that also, the way I said before, like we are sitting on some cash and all. So I can just give an example of that. Like there were a few stocks which did not perform well, and there were a few stocks which really did well, and which after doing well also, because of that reason, the Voyager portfolio has outperformed all the benchmarks over a period of time. So it's like there were stocks like you can say CDSL, which have not performed. If you see from past 1 year, it's given you negative returns, or it's just on par at what it was a year or year and a half before. But there were few stocks where we outperformed the like the Voyager outperformed the benchmark and all also, where we were sitting on cash. Like we bought stocks like BSC on Network Technologies in past 1.5, 2 months. And both the stocks like BSC, we entered and we got out of BSC within a month's time and earning around between 40 to 50% returns within a month's time. And same with NetWeb, we earned around 22% in like 2 weeks. So that's why sitting on cash is very important as of now, where you may get good opportunities over a period of time. And as I said, like CDSL, or you may take Protein governance, the share which has gone down like 40-45% from its current value, where we are still holding it and we still see the growth in those shares we over a period of time, because when we bought those shares, we thought of buying those shares only for a perspective of 3 to 5 years down the line, not for 6 months, 9 months, or a quarter. So for that, we've also been in touch with the management. We're meeting the management of the companies and all, think checking on what they are doing and going through on the performance and what the new updates they are giving, new technology softwares which they're coming out with and everything. And we still think on such stocks to we still think that we can wait on these stocks to perform better. because not every stock you choose will give you amazing outstanding results. There'll be a stock or a two in each and everyone's portfolio which has given you negative returns, but it's just a matter of time. It's patience, where you just have to be patient enough in this market scenario right now, where if you're confident about that stock, those stocks will give you good returns 3 years, 5 years down the line. It's just patience, what is required right now in the current market scenario.
Actually, that's a very interesting stock that Dhiren brought up, Protein, because it's faced a downfall primarily because it's bid from I mean it was bidding for a new project for PAN 3.0, and
2.0.
sorry. So,
Yeah.
and it sort of got out of the bidding process very early on. So a lot of the street expectations around that became a little dampened, and that's where the stock has taken a massive hit. It's interesting that Dhiren has been holding on to Protein because obviously he understands the company has met the management, is pretty convinced on the prospects. There is a high conviction holding for us, and that's being held on to. However, on similar lines, we in the last I think a couple of years back, we had a stock called Praj Industries which we'd invested in, which was quite a failure because of similar reasons. And I'm saying similar reasons because there is dependence on the government, which results in a certain trajectory for the stock, which can be a little unpredictable and volatile. So Praj as well, while it was doing extremely well, it was making ethanol manufacturing equipment for most of its customers, and we all know the hype around ethanol that was created by the government at that time. It was all in action till the time food inflation came into the picture, and when food inflation rose, what happens is the government is obviously going to say that we are going to control food inflation and make sure that people are fed at a lower price rather than reducing petrol prices for or fuel costs for people. So priorities for the government are going to be very clear and placed towards food rather than food security rather than fuel. Um, and immediately the government said that ethanol manufacturing, all sugar manufacturers have to stop directing sugar to ethanol and have to focus on sugar manufacturing. And that's where ethanol took a hit, Praj took a hit, and we exited the stock. So we've gone wrong, but the strategy on what we do after that obviously differs depending on market conditions, depending on how diversified our portfolio is, the fund manager's conviction. So while we exited Praj and unfortunately also recovered after that, Dhiren has been holding on to NetWeb, and we're fairly confident that this is a story that we want to play over the next 3 to 5 years, and we're patient enough to hold on to it because we're able to contain risk because of diversification in the portfolio. So Nilanjan, if you've got a question. So,
Yeah, yeah. Good afternoon, Sagar and Darinder, and thank you for giving me opportunity to. It's a not a question. It's generally a feedback pertaining to Voyager. I am a subscriber to that, so I have 2 3 observations. Am I audible?
Yes, you are.
Yeah. So I've been since the part of this journey from last like around 1 year. So I'm currently in a negative around 4 5 lakh rupees. So I understand this was largely due to my own stock selection. That is, I'm still hoping and committing to continue this journey with you all. There are 2 3 recommendation on it's a kind of feedback. There must be some kind of standardization when you are recommending a stock. Instead of giving a price, you should give us only a quantity of stock which we buy, right? Sometime I receive an email or WhatsApp like the price, and sometime I receive in the form of quantity. So I mean, there must be some sort of standardization to while giving you a recommendation to a client. So it's make I mean, like clearer to us to I mean to punch the data into the system. So the second feedback and recommendation is that sometime due to multiple factors, we uh, we do individual buying also. So while screening our portfolio by your good team, especially in the certain periods, so there is no advisory or some kind of alert mechanism is there. Ki, yeah, you should not go with this thing or you should exit from this. So I mean, this small alert system to be placed into the system. And the last one is that there must be a system. I mean, it would be a very helpful as some kind of portal where each one of us can manually enter or punch the numbers of stock which we hold. It's like almost a replica or a mirror of our portfolio to track, I mean, align with the recommendation, because sometimes there is a mismatch with the I mean, uh, the things which you recommended and things which we punch into our portfolio. Yeah, this is
Okay, so I'll just the thing is, you asked three questions. The first question, uh,
They're all sort of interlinked, right? And
interlinked. Yeah, that's what.
yeah,
So
one thing
the
that solves it is tech. I mean,
yeah.
yeah.
So the first question, especially like the thing is, we can't recommend you the quantity to buy because everyone has a different portfolio value. Everyone has a different bank balance, and on that reason, we only give you like percentage of the portfolio which you should allocate it to. So if we give you a quantity to buy, example for a 10 lakh portfolio guy, and the same thing for a 50 lakh portfolio guy, it will be different. So we can't give each and everyone a different quantity. Like if I have to give you 100, I can't give him 100. I have to give him 500 for a 10 and a 50 lakh difference. So there is just one thing where we have that kind of a line where we can't cross for the quantities to be bought and all. But of course, the percentage of the portfolio which you want to allocate to, like which you should allocate to, that we 100% should do, we can give you that. So that percentage should be at least a clearer picture for you guys, for each and everyone to work with. What was the second one? Uh,
See, the second one was on alerts, Dhiren. So I think Pratyush has made a great point in the messages where he's saying that we can build an app like Liquid does or Strategy do. So just to let you all know, I think this has been the first year of Voyager, right? So a lot of the processes and systems are pretty manual at this point in time. What we're doing is that we wanted to get to a little bit of a critical mass in terms of number of customers, use those learnings and observations and convert that into an app. I don't think it's very complicated for us to do that given the small case ecosystem itself, which we can leverage. They have built an excellent backend which connects with multiple brokers and execution can happen very seamlessly. So what we'll be doing in the future over the next few months is we'll be using the backend of Smallcase. They do provide that as a B2B service. So we will be taking that in and we'll be building a front end on it. So basically it acts like a small case app. However, everybody gets a different portfolio because it's a custom solution and it depends on what you already have. That is something in the works. We were just waiting for a few more customers to come in for us to become a little more effective in terms of capital allocation at a company level as well. But definitely, point taken. I think these have been issues that we faced in the past as well. We keep getting feedback from some customers in terms of the execution being delayed also and difficulty in converting the percentage to number of shares and stuff like that. I think tech solves for all of these and we can definitely make these accommodations when we build. The other
and
option till the time we do that is also that if you need execution support now that we have Paterson Securities as a partner slash owner, what we can do is they obviously have a broking license. If you need any help with execution, we can always get an account opened with Paterson Securities. We assign a dealer, and the entire execution of that basket can be passed on to the dealer. So you don't really have to struggle with quantities and time and when to execute and executing an entire basket together and stuff like that. So just to let you all know, that option is very much open till the time we come up with the app. But that'll be a few months away.
And just one more thing, just to conclude on that, it's especially regarding the portfolio, and it's like, see, each and everyone has their own selective portfolios. Okay, and if you are a client of Voyager, I would request you guys to go with our recommendation, our reviews. And if someone's given you a stock to buy or some, like there are people, friends, cousins, relatives who will just tell you that buy this stock, buy that stock, sell this stock. So if you have any idea or something, you can email us on that day itself and we will review that stock and we will tell you that is it a good stock to buy or no at that point of time. We are here there for you. We will reply within 24 hours for that matter. And rather than getting into a wrong stock at a wrong time, or you can get into a good stock also at a wrong time, you will make losses in both of the scenarios. So it's better you can get it reviewed by us, by the team. The team will get in touch with us. We will have a say on that, and the team will email back to you and everything. And so at least you will have a clearer picture on which stocks to select, which not to.
Yeah, thank you so much for the clarity. And just a quick question. So the Patterson is, it's like I'm quite little bit of spectacle about this thing about the safety, because I'm a client of Zerodha. So
Mm.
compared to Zerodha and moving to Patterson, I mean, it's a kind of lot of, I mean, there is a social this thing. There is a data privacy and all these stuffs is going in the market, and you may lose money and they
See,
might
it's not
lose your information.
it's not mandatory or compulsory. It was just an option. Like if you want uh, to your trades to be executed as well, also at the same time, where if uh, if you are a corporate professional or something, you don't get time during the day when we give you the recommendations or something, and then you miss that opportunity. And then if you say a day or two, you see the email, and you've already missed that opportunity. The stock's already moved 5 or 10% or XYZ percentage. So for that bridge we are providing the gap between the recommendation and execution, where if you are busy and all, so you can take that help also. You can open the account with Paterson and then the trades can get executed there. We are fine. We are okay with the way we are going also as of now, where you can execute your trades on your own. It's just that the timing has to be right. If we are recommending the trades to you today, please execute them today. That's what we would like to ask. That's it. Nothing else.
And don't worry about data privacy and security. I think these guys have existed for 130 years. They've done the right things. So be assured that if you do open an account here, it'll all be very watertight from a regulatory perspective. It'll all be sealed, completely safe. No need to worry at all. That assurance I can definitely give you. No, so don't have that hesitation in mind if you're opting for that. Purnima, if
Well,
you've
I'd like
got,
to just
yeah,
add
yeah,
something here.
yeah, yeah.
Um,
Sorry, just to
so
give you a background
really,
before that, Purnima is the head of wealth management at Paterson. Just to make an introduction before she adds her comments on that. Yes, Purnima.
okay.
So
One is
thank you. So just a thank you note. Thank you, Jain Saab and Sagar ji. Thank you for the clarity.
Yeah, yeah. Yeah, Purnima, go ahead.
Yeah. So basically, Mr. Sharma, what I'd like to add is that today's regulatory environment is very, very strict, whether it comes to a large broker or a small broker. So compliance is very strict, and we are a regulated SEBI broker with both the NSE and BSE memberships. The other is that in our entire history, which is over 100 years old, we have not had a single case of customer complaint against us. So I think this would be a record because there have been times of different kinds of scams all through, and we are there without a single complaint in our entire history. So that way, I think on both fronts, you should be assured. That's what I wanted to ask, to add.
Surely, thank you for the clarification, and surely we'll check and see the brokerage and all these formalities of your platform.
Yeah. So Nilanjan, we can get in touch. Maybe Harsh or somebody can call you and give you details. Obviously, the choice is yours at the end of the day, but we'll just run you by what the scene is.
Thank you.
Yeah,
Thank you so much.
and I think Pratyush, you message that will auto execute. So that totally depends. Like if you're with Paterson group at the same time, the trades will be executed automatically just after the approval. The approval is important. Without the approval, no one can do that. As Purnima just mentioned, that in this current scenario, it's like privacy and the tech, the softwares are very important. So approval will be required, but other than after the approval, the trades will be executed automatically.
Ranjani has a question. We'll go back to her.
Okay.
I just wanted to second what Sagar and Purnima said because my investments are with Paterson as well. For the past 4-5 years, it's been absolutely hassle free. It's all consolidated and taken care of by them. So just wanted to second that. I know it's in safe hands. Thank you.
Thanks so much for backing it.
Thank you, Ranjit.
Okay, so if we've not got any further questions, we can probably wrap. I mean, we're available for answering anything, helping you out on our social handles, on email, on numbers. They're available on the website, and you can get in touch with us anytime. We assure that we'll get back to you ASAP. Um, so with that, yeah, here are the details.
Just the website, the address, the email ID, and the phone number.
You
Anyone.
can walk in at the office as well. Dhiren's there.
Yeah.
Cool. All right. So thanks everybody for joining in. It's always a pleasure talking to you. Signing off right now. Hope to see you guys soon again. Thank you.
Thank you. Thank you so much, everyone. Thank you for hearing us out and making the time on a weekend to attend a webinar. So thank you. Thank you so much again.